Welcome to the ROI Masterclass, the podcast where vision meets strategy and bold moves create measurable results. I'm Liat Siegel, interior designer and ROI strategist with 17 years of experience. I help businesses transform properties and ideas into high-performing assets. This show is specifically for real estate investors, hospitality operators, and boutique developers who aren't afraid to take risks, challenge the status quo, and demand a return on every decision they make. Each and every week, we talk with innovators and leaders across industries about the strategies and the insights and really all the unconventional thinking that turns potential into profit every single time. If you believe that smart design, decisive leadership, and strategic risk are the keys to real ROI, you're in the exact right place. Let's dive in. Today, I'm joined by Angelo Vitale, founder and principal of Vital Capital. Angelo brings over a decade of institutional experience from Wall Street investment banks and CRE investment firms to his current work in private equity and commercial real estate. From flipping and building homes with his family to structuring large-scale multifamily and storage deals across the Northeast and beyond, Angelo's focus is on delivering value and ROI for both investors and communities. We'll explore his journey, the challenges of today's capital markets, and the lessons he's learned scaling his business in a rapidly changing economy. Thank you so much for joining us today, Angelo.
Thank you, Leah. Great
Amazing.
to be here.
I understand that you're traveling.
I am, yes. Literally just landed in Texas, checking out a new storage opportunity.
Amazing. I would love to hear more about that, but can you first dive in to your background and literally the transformation that brought you from where you were to where you are today, looking at a property in Texas?
Yeah, for sure. It's been an interesting journey for sure. I've came a pretty long way from where I started out. My family actually has always been in construction and has a building background, but I kind of went an alternate route. Effectively went through, my undergraduate degree, got a role after school in sales. I studied political science, so nothing to do with real estate or commercial real estate, and ultimately knew that my passion was in real estate. So I effectively had the opportunity to go work for one of the largest commercial real estate brokerages after basically cold calling all the managing directors in my area. I had the opportunity to go work for CBRE as a research associate. I worked with them for about 2 years, and same thing, I kind of knew that I wanted to be more on the finance and investment side. Quickly learned that, I was very interested in more of the investment and private equity world. Got an opportunity to go work for a company down in Miami, one of the largest private equity B-piece buyers in the CMBS space. It was a very exciting opportunity. I did that for about 2 years as well. And, from there, I jumped around a little bit, landed back in New Jersey and New York City, worked for rating agencies, worked for some of the top investment banks as a consultant. I underwrote probably upwards of $5 billion in transactional volume through the pools that we were securitizing at the rating agencies and in behalf of the investment banks. And, I always had this entrepreneurial itch, from my background and from where I grew up. And over the last couple of years, started buying some investment properties, my own capital. And ultimately, now we're on a new journey to raise capital into our discretionary vehicle and acquire housing and storage assets along, best-in-class operators throughout the country.
What was the major thing that made you make that switch to entrepreneurial life? It's not easy. There's a lot of ups and downs and challenges. What was that thing that drove you to do that, and what keeps you in it?
Every day is different and exciting. I've always enjoyed, seeing different things and learning new things. That's been like the ethos of my entire career so far. I've kind of hopped around and spent 13 years learning different aspects of this business. I've worked with, like I said, large private equity investment banks and developers and operators and have a pretty wide scope of knowledge of this industry. But I've always had the itch, the entrepreneurial itch, that I had to scratch, I guess. So I started doing that on my own, like I said, and today it's getting very exciting and interesting to continue doing this.
What kind of projects are you working on that's exciting, that's challenging? Share with us.
Yeah, so I really have two verticals right now for my business. The first one, I really invest on my own account in the Northeast, primarily in New Jersey and the Northeast, going up a little bit towards Massachusetts and New York. And we're investing primarily in housing. So That's multifamily investments, mixed use investments, and single family investments. We've been doing that for the last several years, and it's been very good, very profitable. It's been keeping the lights on and very exciting. And the second bucket, which Vital Capital is primarily mandated and focused on, is partnering with larger operators and GPs and co-GPing with those operators. So like I said, today I'm in Texas looking at a large storage property that we're looking to acquire along a very experienced operator. He's operating 4,000 storage units throughout the country. And, we're bringing our institutional experience and connections to effectively help him bring his business to the next level.
And what is that next level? Like for somebody that's operating 4,000 units across the United States, what is that next level for him?
Sure. Yeah. And we've had this conversation, and I'm not going to put words in his mouth, but people in that frame, when they're already operating so many units, their next level could be bringing it all together into a portfolio and potentially preparing for a sale, to a larger REIT, shoring up all of their assets and making it more institutional, to actually have a large company come and look at them, whether it be a private equity company or a REIT, or even making sure that they're ready to receive a large capital infusion from, a bank. So, my whole ethos is really partnering with these operators, at least from the Vital Capital Management standpoint, and bringing my experience in that light, from the debt and equity perspective. And also, on the same side, I'm an operator myself, albeit, on the smaller side, but effectively looking to bring all that experience to operators throughout the country.
So when you come into a project like this one, what are you looking for and what are you looking to optimize?
This one specifically, I'm here, learning about this opportunity. So I'm doing my due diligence. I learned very early on in commercial real estate, one of my first lessons was kick the tires, right? Which literally means you have to go look at the property and see what's going on. So this property, I want to actually go and see how the area is operating, if it's actually busy, if there's any major developments going on, so I'm really here for a due diligence checklist item, and making sure I check all my boxes. It's very important. Yeah, effectively, I'm here as well on behalf of my investors and LPs. Part of my role is to make sure that this opportunity is one of the best opportunities that we can invest in, get an asymmetric return. I'm not looking personally for myself to only make single digits. I want my investors to be, getting the best ROI.
Of course.
Exactly.
Of course. What kind of systems do you implement long-term for them to see that ROI?
So long-term, we have our vision for the next 3, 5 to 10 years, and it's really focused around that, as I just mentioned, really looking at, is this opportunity an asymmetric opportunity? Is it on the risk return profile? Is it something that, are we going to lose our capital? That's really the biggest thing, is protecting your capital, but also increasing it. You want to make sure that you are protecting yourself from the downside at all times, so you don't lose any of that capital and you're able to roll it into the next opportunity. So over the next, let's call it 5 years, I hope to bring several opportunities like this to the market. And, we're going to continue to invest in those types of opportunities that are really focused on providing that spectrum of return, and the higher double digits. Like I said, I'm not interested in doing this for free either.
Are there any red flags when you see a potential property and you're like, well, this is absolutely not a good investment?
Yeah, certainly. When your red flags pop up most deals. Today, I guess I'll take a step back. When I was looking more on the institutional side, we were underwriting hundreds of deals, in a certain pool of assets, or we were looking just at a specific asset. We always had our certain items on our due diligence checklist that we had to go through. A red flag, for instance, on the lending side is almost the same as on the equity side. We're looking at the property, the market, we're looking at the operator, we're looking at credit, we're doing a really deep dive. So there's a lot of potential red flags that could come up, but it's always important. And from what I've learned, from my schooling and institutional background, is really starting at the macro level. I'm always starting at the macro level, looking at the market, what's going on in the market, what's going on in the larger economic spectrum, even the United States and global capital flows, and then working my way down. So, that's why I'm here today in Texas. I'm still on the macro level, but I'm looking now a little bit deeper. I'm trying to look now into the asset. I'm going to meet with the operator. I'm going to shake his hand. I'm going to see what his character's like. It's all important. So there's a lot of potential red flags, but I'm an optimist in the end. So I go into every deal with the idea that this is going to be a great deal, and hopefully this one is.
Yeah, well, you have to be an optimist to be an entrepreneur. Otherwise,
For sure.
you can't survive.
100%. Yeah.
So, on the other end of the spectrum for the other arm of your business, what are you seeing makes the biggest ROI in terms of whether it's design or market positioning, etc.?
Yeah. So when we're actually designing properties, let's say it's a single family home in the upscale market, which, we just did one of these not too long ago and we have it on the market. From my perspective, design is extremely important. I mean, people that are buying a house, whether it's their primary home or secondary beach home or investment property, they want to know that when you walk into that home or property, it has a nice feeling because someone's going to be staying there. Even if you're buying it as an investment property, you're going to be renting it to a family or a couple, or someone's going to be staying there as a vacation home, and it's got to feel welcoming. So it's very important, the design aspect of it. But then again, I have this financial lens all the time. So I'm always looking at, is this going to actually, if we put quartz countertops and a waterfall, for instance, on the countertops, is it worth that extra couple $1,000s to do that? And then if you're doing that across, multiple units, is it worth potential hundreds of $1,000s, So I'm always looking at that lens, is the design aspect of, the property going to provide the return that we're llooking for?
Absolutely. I mean, we always need to quantify whether or not the investment is going to pay off
For
and
sure.
to what extent, which is why I am a big believer in tracking. You can't improve what you don't track, right? And so the comps tell the whole story, don't they? On whether or not to put the waterfall countertop or the quartz or the granite, what to do, because you always follow the breadcrumbs of success in order to know how to be successful, how to up that game, and then track it internally to know on, maybe you've tried something new and you see whether or not it does well. And if it does, and you have that secret sauce to make a little extra because you can, put in 10,000 and that will massively impact, property value, or strategically or unstrategically not put in something that's $10,000 that will, yield nothing. So it really all depends, I think, on the comps.
Yeah, I would 100% agree. I mean, the comps and what has been going on in the market is going to drive your decisions in the end as well. We're always comping every single property, every single opportunity because it's almost like a window into the potential future, right? So you want to see what we can sell this opportunity for, what we can, rent it for. That's definitely one of the most important parts of real estate.
Yeah, absolutely. You worked with your family, correct? Your father?
When I was in high school and even younger, I mean, my dad threw a hammer in my hand and said, go make this wall, or, here's some 2x10s, move them from here to there. And I grew up, on the construction site. My neighborhood, like my dad literally built like the majority of the homes around me. So I was always kind of just like running to construction sites and helping them out. And it really was awesome. It was exciting. It instilled like a very stringent work ethic in me. Even today as an entrepreneur, I'm on the same kind of path that I was before. And yeah, I mean, it was always interesting, but I always knew I kind of wanted to be a little bit more on the other side of the table. I'll take a little bit shot at myself. I've always been very clumsy and kind of injury prone. So I knew I didn't want to be on top of a roof one day and fall off, which unfortunately it's very common when you're a contractor.
Yeah, I mean, my father is in construction and my grandfather also was in construction. So seeing behind the scenes and how much it took a toll on my father, it's a lot, but at the same time, I'm very grateful for all the knowledge and experience that I gained to apply to what I'm doing today.
Yeah, it's awesome. I wouldn't trade it for the world. My dad's literally 72 now and still building decks and doing projects. So,
Exactly, and mine as well. Except for his knee surgery that he had to have because of the wear and tear from construction on his body, but he's still at it. So, what did you learn from that? How did that impact what you're doing today?
like I mentioned, it really instilled that work ethic in me. I'm continuously thinking about my work and my opportunities. I'm continuously trying to learn new things, which was always a mantra, I guess, around, my house, even though like my parents, didn't go to college. They were always telling me, school is one of the most important things. From working as an entrepreneur, and seeing my dad go through the struggles of being an entrepreneur, I always thought, hey, I want to go get a great job working for someone else, which I did, and I was doing great, making a lot of money, and it was working very long hours for investment banks. I cut my teeth like working as, an analyst doing 14 to 16 days and working until the middle of the night. And I enjoyed it. I enjoyed every minute of it because I was learning something new. So it really instilled in me the work ethic and the curiosity.
What are you learning from what's happening in the market now in terms of trends? Are there specific challenges or things that you're facing today that are paving the path for tomorrow?
From the standpoint of the market and the macro level, there's a lot of, if you want to call it red flags or, things that I do see in the market. There's a lot of distress, and in especially, where I came from in the CMBS markets, people talk about that all the time, but there is, I don't know what the number is, but near $1 trillion of debt coming due, within the next couple of years. And a lot of the lenders in the space, in my opinion, continually push out and modify loans instead of foreclosing, which depending on the way, how you look at the world and real estate investing, it could be good or bad. So I'm not to say that anyone's doing something right or wrong, but what it is doing is pushing out properties that could be coming to the market. There's a lot of headwinds that could occur if, let's say, for some reason, global or macro environment changes drastically. A lot of real estate owners and investors may be forced to give back the keys, as people like to say in CMBS especially. And basically what happens then is lenders have to take on that property. In the end, for me specifically, I see that as a potential opportunity, because when a property actually goes back to the lender, and they have two options. They can keep it themselves and operate it, which they typically don't want to do because they're not set up for that, or they put it on the market. They send it to a receiver, and that person is a broker most often, and they hand it off or sell it to a bidder. And that's often at an off-market transaction. So, part of my experience in that world, and distressed real estate specifically, I have some relationships with some of these larger brokers and lenders and operators, and my goal is to really capitalize on that.
Were there any lessons? I know that you went through, as I did, very early on in the financial crash of 2008. Were there any key lessons that you learned from that impact the way that you operate today?
I was still an undergrad at that point. I was looking at it from the outside, but when I did get involved in commercial real estate, and most of my mentors and bosses were heavily involved in it. So I had firsthand, experience and war stories from them. It's really driven a lot of how I look at investing in real estate, because I know what happened back then in 2008, right? The same thing I just kind of mentioned, but really was more so on the housing side and single family. It was really focused more so RMBS, and basically all these investors continuously just securitized assets and into different pools, and it basically got out of control. So, looking forward today, for me, something that I always look for and always focus on when I'm buying an asset is the value of the actual asset. It doesn't matter how it's capitalized. It doesn't matter if it's in a pool of assets, or there's always a underlying value to a real estate property and project. And it's really based on the fundamentals of finance and commercial real estate finance. For me, starting out at, the largest commercial real estate broker was a very important step, really set a foundation for me. And then working for, one of these large private equity companies, it kind of really instilled that you should always look at value first. Don't, we just talked about comps, but comps are great. But they're only really one way to look at value when you're looking at real estate. If you talk to appraisers and you look at your appraisal, they're looking at 3 different ways to look at real estate. And in my opinion, there's many more ways. So when I look at an opportunity, I'm underwriting it every different way I can think of. I'm looking at it from the aspect of, is this a good single family flip? Is this a good rental? Is this a good STR property? Could I put an ADU in the backyard? There's all different ways that you can look at opportunities. And as a lot of people saying, and like to say in real estate, you really make your money on the buy. So it's one of the most important, basically the most important thing you should be doing as a real estate investor, in my opinion.
Would you say that that is your biggest strength, like what sets you apart from any of your competitors or anyone else that's kind of doing what you're doing, is that you look at the valuation differently and how to position the property from the biggest ROI perspective?
Yeah, I have a lot of experience in different aspects of this industry. So I look at it with my unique lens, which really, we went through, started out in construction. I know what things cost. I know how to build a property, but then again, I also know how the financial side of this entire market operates. So I'm looking at it from all different angles, and I'm really trying to foresee the potential future. I'm trying to see, is this going to be best if we, like I said, operate this as a short-term rental, or is it best if we take a longer lens and try to get market rate renters in there? But every asset class is different. So, if you're looking at a multifamily property, you have different lens than if you're looking at a storage or an industrial or a data center for that fact. I've had the opportunity and underwritten every different type of asset class that there is. I've had the opportunity to kind of think of through and present different opportunities to our investment committees that were investing billions of dollars a year. My outlook and view has been structured along those lines, and I'm always looking to capitalize and bring as much value as I can to, my partners.
Amazing. Thank you so much, Angelo, for joining us today. Such a pleasure going through your background and everything that you're doing and your journey and your learnings. If our audience wants to find you, how can they do that?
So you can find me on LinkedIn and also at our website, vitalcapitalmanagement.com. Shoot me an email, shoot me a DM. Happy to jump on a call and talk just like this.
Amazing. Thank you so much for joining us today.
Thank you, Leah. It's a pleasure. Thank you very much.